Okay, 345 points on the Nifty, so this is going all the way. Look at that. I mean, just amazing, outstanding market looking screen. Look at Bajaj Finance once again. And I'm not even talking about some beaten down second tier stock here. I'm talking about, something which actually has fallen the least. Even with regards to top tier financial names, it'll sort of rank up there with the HDFC twins, etc. 6.5% after almost 11-12% on Friday. So that is just, quite something. And I think it started at what, 3,700 rupees today. On Friday's close, it was about 3,700 rupees. This we're seeing across the board. The Nifty is up 350 odd points, and it's showing up in pretty much all places. Look at the sectoral sort of gainers before I bring in another special voice here on the channel. So we've got the FMCG index, which is up the most. I mean, I think a big thank you to ITC there. The Nifty FMCG index. It's followed by the Nifty Private Bank Index, which is up 5%. Then you've got the MNC index, which is up 4.5%. So, yeah, I mean, 13,740, the Nifty MNC. The Nifty Consumer Index is up 4%. 5 sectoral indices with gains in excess of 4.5%. I mean, that's quite something. Manishi Raychaudhuri of BNP Paribas is now joining us to discuss the fundamentals of the market right now. Manishi, thank you very much for your time. Great to have you here. It's just been an incredible run Friday and today. What do you make of it? Let's just stick to the markets first, Manishi. How much of the re-rating is done? How much more is left?
Absolutely. What we saw on Friday and what we are seeing today is just the first order effect. It's a direct reflection of the benefit that's coming to the company's bottom lines from the lower tax rates. So if I combine Friday and today, it's I think about somewhere around 8 to 8.5% up move that we have seen. And if one looks at the indices like BSE 500 or BSE 100 or Sensex, I think the top tier companies are getting a benefit of somewhere close to 8 to 15%, depending on the tax rate that they were paying. The companies that were already at a lower tax rate, the benefits would obviously be commensurately lower for them. So one could argue that over Friday and today, much of the immediate benefit is possibly captured, but I would stress on that word immediate. As I said earlier, this is just the first order effect. Going forward, the market would clearly look at the benefits that accrue to corporate capex, because this is possibly in a long time that we have seen a concerted supply side effort by the government of India. Historically, over past decade and a half, we were only seeing demand side measures, which were designed to boost consumption. But this time around, for the first time in many years, we are seeing a set of measures which are intended to boost investments, and that's a significant departure in government policy. So we think that these corporate tax cuts, combined with the lower tax rates that are being offered to new investments, which are being done from October 19 to around March 2023, they're being timed exactly with these US-China trade war ongoing, and which in turn could actually lead to a significant degree of new investments as well, both from domestic Indian companies and from the multinationals, some from companies that have hitherto not invested in India. I think the second order and the third order benefits are yet to be captured, and we have to watch out for them over the next few months or even the next few years.
So Manishi, morning, would you argue for higher PE multiples for India? So, just the last count was that India was trading at 17.5 times forward multiple. So do you think there is a case for a re-rating of multiples? Right. Because there is also a contrarian view that while these measures are a strong signal from the government, the fundamental impact is quite limited, at least for the near term.
Right. So the immediate fundamental impact, as we saw, was on account of the lower tax rates and therefore higher net incomes for the corporates. Going forward, I think the supply side measures that we have seen would have to be combined with further resource-raising measures. Some of these would actually need spending some degree of political capital on the part of the government. For example, I think the market would be looking forward to how the government intends to balance the budget. That 24.4 billion of revenues that have been lost would have to come in from somewhere. They can come in from monetization of a higher quantum of deficit. They can also come in from a high degree of divestment proceeds, which the government may look forward to. If it is the latter, if there are a significant degree of higher non-tariff or the non-tax revenues that the government is able to raise, that I think would be taken as a significant positive by the market. And then I think even market participants would be able to argue for a further re-rating. For the time being, we are not really arguing for a further re-rating from the present levels, because we know that the market is at a small premium compared to the last 10 years average. The market is also at a significant premium compared to the other Asian peers. But even if one factors in the direct benefit from the lower tax rates, one could definitely argue for the present strength to continue.
Manishi, if there is one space that you would bet on, which kind of sort of combines the benefits of the tax rate cut and the second order impact, which is yet to materialize as you put it, which would that space be?
Oh, it would be banks, financials, particularly the private sector banks. They tend to gain not just from lower tax rates, they also tend to gain from much larger degree of capital being freed up for lending. We must remember that this is a direct increment to their Tier 1 capital. Therefore, they have much higher degree of lendable resources at their disposal. If we do see a corporate capex cycle being kicked in a few months down the line as a consequence of the measures, then I think the banks, particularly the private sector banks, would be the biggest beneficiaries.
Okay, private sector banks on the corporate side, which would essentially be a play on everything which is to come, as Manishi put it, in terms of second order, third order impacts. The first order impact, which is we're already seeing in the prices, probably, as Manishi put it, has already been captured. Thanks very much, Manishi. We are out of time. Would have loved to carry on this conversation for a bit longer, but we'll have you back soon again. For now, I mean, we are sort of getting you news that things are looking upbeat. And how? 366 odd points on the Nifty, 11,640 is where we are at. And this is for the second day running, just a green screen which is flying away. From Rima, me, everyone on the team, thank you very much for staying with us here on Trading Hours. Stay tuned. There's more coming up after a quick break.